Hi, Christian. An interesting takeaway from the recent Fed meeting was its decision to rethink the communication framework. Now, if guidance becomes less explicit, what indicators do you think investors should be paying more attention to?
When the Fed released its first statement under new Fed Chair Kevin Warsh last week, the statement contained 132 words. And that compares to 431 words during the statement released in April. Who's counting words? And of course, the most recent statement did not contain any forward guidance. Now, we have never been that fixated on just the CPI print or the dot plot. We always consider a cluster of macro variables. A cluster that includes, for example, is the inflation in the economy becoming more broad-based or less broad-based? What about wage growth? Is it consistent with productivity growth in the economy? We look at credit. Is credit becoming harder and more expensive to obtain, or easier and cheaper to obtain? And then we look at the labor market. Is it getting tighter or is it getting softer? Now, being bottom-up investors, obviously we don't just look at the macro data. We put a lot of weight on the interactions we have with our companies that we're invested in. Are they pushing through price increases? What about their order books and their capacity utilization? Are the companies experiencing wage pressure or input cost pressure? And what about their working capital? Being invested globally and well diversified, with all of these interactions we have with companies, eventually a picture emerges based on these micro indicators. And that picture gives us a pretty good idea how the monetary policy is entering the real economy. And oftentimes we get that picture earlier than becomes visible in the official data.
The Fed also pointed to AI as a driver of productivity and highlighted its potential impact on the labor market. Now, as you're meeting with companies around the world, are you seeing evidence of either yet, or do you think that expectations are still running ahead of reality?
I just returned from a week of meetings with companies in Japan, and the messaging actually was quite consistent. The management teams there see a large opportunity through AI in the long run. Obviously, that's important in a labor-constrained economy such as Japan. At the same time, the real-world use cases today are still very much in their infancy. The one area they can point towards where they see some real impact today is software engineering, coding. When it comes to coding, you can see it in the productivity data. Outside of coding, they're running a lot of experiments, but it's very difficult to point at the data and see any real impact in terms of labor or productivity. Now, does that mean that AI is overhyped? Not necessarily, but what it means is it's still very much early days. And that shouldn't be totally surprising. AI is a general purpose technology, and diffusing a general purpose technology in the economy tends to take a long time. Because what happens in reality is that when you have this new technology, initially you apply it to existing use cases. And that means existing use cases become a little bit more efficient, a little bit faster, but the real step up in productivity tends to happen when you re-architect workflows and find new use cases. Take the personal computer, the PC, as an example. It was only after we realized that it can do more than being just a glorified calculator and a better typewriter that we found new work applications, new use cases, and productivity stepped up. So personally, I think expectations may be running a little bit ahead of reality, but we're not in a prediction game here at First Eagle. We are students of history, though, and there's the old saying that in the short run, people tend to overestimate the impact of a new technology, say over the next couple of years. But in the long run, they tend to underestimate it, say over the next decade or two. I wouldn't be terribly surprised if that saying holds again for AI.
Thank you, Christian. It was great to hear from you.
Thank you.